It is Thursday morning, 18th? Yeah, 18th of June, and it's here for a quick morning update. Going to run through what we're looking at in the forex land, move over to futures, and then into crypto. Not a whole lot really to talk about today. I don't have any specific topics on the agenda, so we'll keep it short and sweet. Just kind of run through the numbers, look at what's happening, get some ideas around directionality, what we might want to be trading today, and then go from there. All right, so first thing is over here on our calendar, things to be aware of that are coming up. The Canadian, we have a CAD, non-farm employment report coming up today, but also the bigger news for us, we have manufacturing index and also unemployment claims here in the U.S. So it definitely could be, they're labeled as orange instead of red, meaning medium impact, but just with everything else that's been going on, these could certainly have a little more of a microscope on them and could certainly be catalysts for increased movement in the marketplace. So be aware of that. Though if you're trading in forex, obviously that's coming up in about 20 minutes. So be aware, spreads may widen around these. Stay away from anything CAD related, CAD cross pairs right now, and maybe come into it after the news occurs and the markets begin to normalize. I don't know if we'll see big widening of spreads like we typically do around high impact reports, but like I said, given everything else that's going on, I would expect these to have a little more of an impact than they maybe typically would. So just be aware of that. You've got some news coming up here in 20 minutes, so that means that we may want to stay out of the markets. As we know, we have in forex you're able to see spreads you're bidding at, and you can see it in every market as well, but it's probably more highlighted in forex because we're working out to 5 decimals, right? When you've got high impact news, market makers are taking off where they're willing to buy and sell, right? What we're seeing for bid and ask is the best price between the pending orders out there, the limit orders that are set, right? That's the best price we see is there. So when you've got market makers, when you're coming into a news event, folks are removing where they're willing to do business, and that causes spreads to widen. So just be aware of that. As far as things that are happening right now in the forex world, let's pop over here because we have seen some movement. There was some news this morning actually on the Canadian. I'm talking about CAD. There was some news this morning over here on the pound, and that created some volatility in pound cross pairs. And this morning there's been quite a bit of movement with the pound. Pound really pushing the weakness here. Pound yen actually was a reasonable trading opportunity right as the session began. Moved through into the breakout box and straight down, for 20 plus pips to, so if you're playing a breakout trade, that certainly worked out very well. Not everything was lined up, which is a bad trade really. But just playing off of that momentum that had been occurring since that news occurred, was able to take that trade at the bottom of that breakout box and watch it run on. As far as other trading opportunities go, really here we would want to just wait until after the news occurs here in 30 minutes, 20 minutes, and then see what's happening with strength and weakness, which currencies post news are actually moving, right? Because that's what we need in order to be able to potentially profit. We need currencies that are moving and that are moving away from one another. So what currencies are being heavily sold and which currencies are being heavily bought after the news, and then that would allow us to pair those together and potentially find an entry point there that we'd like to work with. All right, so for now, wait until news occurs, but then keep watching and see what we've got here. It could end up being maybe a CAD versus the euro, so euro CAD potential cross pairing. We'll see, but we've got to get through that CAD news first, as well as the U.S. manufacturing news before we can really look reasonably at other opportunities out here. All right. Over on the futures side of things, yesterday, end of the day, big day. So post Mr. Powell speaking. So after he wrapped up, we saw the market begin to fall. It stayed in a pretty tight range for really Tuesday and yesterday, and then end of the day yesterday broke out of that range. Off trading hours floated back up, and then here just recently it's pulling back again. Looking at news, who knows really what's pulling it back. I think it looks like fears of coronavirus seem to have a larger impact than the reality of what's going on with folks not spending money and losing jobs and everything else that's wrong. But we'll see what happens. Maybe there'll be some crazy tweet about a miracle cure that will push the market to new heights. Who knows? Long and short of that is right now we have a mixed bias. So until the biases are in agreement, we really don't have anything to do here on the S&P, which is where we're focused for the small account process right now. We're focused on S&P micros in order to be able to grow that small account and move from there. The trading plan that we're utilizing for that is we're looking at the 4-hour and watching the bias on the 4-hour. So right now the green is over the red, so that tells me the bias is long on the 4-hour. And then we compare that to the bias on the 30-minute. In this case, the green is below the red, so that's telling me the bias is short on the 30-minute. We'd like to see agreement in bias. If they were both long, we'd look for long trades. If they were both short, we'd look for short trades. However, in this case, when we have mixed biases, we just simply wait until the bias comes around and we have confirmation one direction or the other. For right now, this tells us not to do anything. So we have a mixed bias, so we're not going to worry about anything. Maybe we get a rally today. We rally back above this 3110 area. More than likely that'll pull the green line back above the red, and then we'd be able to start looking for long trades again. But we'd need a little bit of a rally. If it continues pushing lower, we'll have to wait a little bit for that 4-hour to come into agreement with the 30-minute, and then we'll trade from there. I know the question sometimes becomes, hey, Brian, gosh, we're not growing that account fast enough. Well, remember the trades that we've talked about over the last couple of weeks, we're up, it looks like about 8% over the last 2 weeks, which is actually only 4 days that we've been in the market. That's not a bad deal. I know folks are wanting to trade more. My goal here is to lay out a very simple plan with quantitative ways of looking at the market and identifying trends, identifying bias, and then trading in that manner. You don't have to trade a ton to be successful, right? I mean, I know it's a small account, and on a small account we're making $20, $50, maybe $100 on the trade. It's not sexy, it's not awesome, but the reality is when we look at the compounding of that over time and watch the account grow over time, that can become significant, but it's going to take time to do it. I know folks always go, but it's not fast enough. I need to trade more. Okay, that's great, but just understand the more you trade, the more risk you've got in the market all the time, and the more opportunity you have for those trades to go against you as well. I mean, every time we take a trade, it's 50-50, right? I know I'm going to sound like a repeating record when I go to this. Folks will go, well, what do you mean? You've got an edge. True, we have a trading edge. We have a trading edge and we have good money management. But the edge only works if you're consistent with the application. The edge only works over a large sample size. The reality is when you click the button, no matter what your edge is and what you've looked at, because no one can see the future, what you've looked at on the historical data, and you've extrapolated from that this is a good time to enter and you've got a high probability of this moving in your favor. That's all great. The second you click the button, when you click buy or you click sell, there's a 50-50 outcome of that trade. We have to be able to understand that. No matter what edge we have, when we click the button, it becomes 50-50. It's going to go up or it's going to go down. And it might go sideways, but you're going to win or you're going to lose. You might win a lot, you might win a little. You might lose a lot, you might lose a little. Reality is that's all you've got, right? So I don't know where I got off on this tangent. So ultimately, wanting to trade more, if you're wanting to trade more just to trade more, you're not serving yourself well. And a lot of the folks that say that, well, you're not growing it fast enough, what are your results to now? Most folks that say that are coming from a place of desperation where they've got to, I've got to make this work. I've got to make money on this. I've got to do this. If that's the mindset, you're going to hold on to losing trades when they're moving against you because you're not willing to take a quick loss in order to be able to find that next best opportunity to have something move in your favor. Also, you're going to be focused on the outcome and not on the process. And the only way for us to really find consistency in the marketplace is to be focused on the process. The outcome is going to take care of itself. So as long as we've got a good trading plan with good money management that gives us that edge and it gives us the ability to win more than we lose over the long run, that process is going to work itself out as we follow the process. So anyway, I didn't want to get on a long soapbox thing about that, so I'm just going to leave it where it is. We might get into something more aggressive down the road once we grow this account a little bit more, but for right now I'm going to focus on simple, safe stuff. And remember, it's only been, we're in for a week and a half at this point, so it's not a large sample size of time, and we've been in a really choppy, crazy market. So let's just let it, we're going to keep talking about very simple strategies that we can utilize with quantifiable ways to measure our entry and manage our exit, right? So anyway, long and short of that, S&P right now, mixed bias, not looking for any real trades. If you're out trade hunting, if you just want to find a trade, play breakouts. You can look for a break above 31.20. You can look for a break down below 31.60. And if you break it, you take a trade in that direction. However, what we're looking at here for this process is a quantifiable way of entering the market. So until this changes, if we get a little rally here, this bumps back up above this 31.10 area, starts pulling that green line back above the red, then we'll have a confirmed long bias on the 4-hour and the 30-minute, and then we'll look for long trading opportunities. Right? So we'll see what happens as the day goes on and we get into regular trading hours here in about hour and 15 minutes. On crude is flipped over on us. Crude is long on both now. Yesterday we had a little bit of a mixed bias, I believe. Crude, we're looking for long trading opportunities. So the 4-hour bias is long, the 30-minute bias is long. So we're going to watch and see what happens there. We've got a couple of opportunities for breakouts. If we break above this 38.50 area, 38.50, 38.60, breaks above that would be a buy opportunity. Of course, we can also watch for pullbacks, back down to 3800. 3800 has been a big level of support for us. There's resistance coming up to it. It's been a big level of support. So pulling back to 38, even here at 38.20, opportunities to potentially buy and take that in a long position. But we'd want to be looking at long trades since the bias is long on both of these. The other way of looking at it is, as we've talked about before, which is just simply trailing down your entry based on the top of that previously closed candle. So if we're in a long position, we'd be looking for pullbacks where we're making lower highs, lower lows, lower highs, lower lows, and then trailing our entry point on the top of that lower high. Right? Over on gold is in well, it started to flip over here to be a mixed bias. So to say we had a long trend here, but it's starting to flip over. Looks like gold might, if this closes down, we might end up having a mixed bias. But right now the 4-hour bias is long on gold still. 30-minute bias for right now is still long, but that may change. So we're going to look for confirmation of bias here before we look to take any trades on gold. So we'd want to see this 30-minute start to move back up a little bit for us so that the green stays above the red, and then we'd look for confirmation of that. So as far as trading opportunities here, we'd be looking at this 38. We'd be looking at this 1738 area for a break to the long side. I could also be watching for pullbacks. If we pull back down here to 1720, which is a big level of support for us, certainly opportunities there for pullback, and then a bounce off of that 1720. I don't know if it'll get there. Depending on what else happens in the market today, we may see a little bit of a rally in gold and be able to look at long opportunities as this moves back above. But we can looking for a breakout. This 1738 breaks above that would certainly be tradable opportunities for us. Or, like I mentioned before, there's also just the simple plan of trailing that entry based on the break of a previously closed lower high, right? So anyway, that is it for there. Over in the crypto world, in a pretty tight channel again here on both Ethereum and Bitcoin. A lot of uncertainty, which really stems from uncertainty in the marketplace overall. And just watching what's happening here. We are in a short bias on both Ethereum and on Bitcoin. Both are in a short bias. However, I really feel like right now would be one of those opportunities to play it in both directions. So if you're looking at Ethereum, you might be looking at a breakout over here above 235, and then look for 230 as your 230 as your break lower. So you might be looking at a buy if it breaks above 235, and a sell if we continue down below below 230 down here. As far as Bitcoin goes, same process really. We'd look for buy opportunities above this 95.50. You could even look at 9,500 really. But if you wanted to be a more conservative, 95.50, if it breaks above, look to see if that continues long from there. Or looking at shorter opportunities, if we can push down below this 3,400 would be I keep saying 30s. My brain must be stuck on the S&P because I see it out of the corner of my eye on this other screen over here. So anyway, breaks above 95.50 or down below 9,400. You might play that both ways, just using a bracket order. As far as bracket tools go, there is a great one in the members area, the tools section. You can utilize it if you're trading using MT4. There is a bracket order entry process on there, so you can just throw it on the chart, move your orders to where you'd like them to be, and then let it sit, and it'll execute for you as it needs to. All right, so that's it for now. Big takeaway is just be patient. Wait for the setups. Wait for the plan. And if the setups meet the plan, we're good to trade. If they don't meet the plan, then we don't do anything. Right? That's what it's all about. It's all about consistency and having a quantifiable way of approaching the market. And that means there's going to be days you don't trade. There's going to be days that you do trade and it doesn't work out. And there's going to be days that it goes insanely well in your favor. Take the good with the bad and roll with it. I mean, that's what it's all about. It's all about consistency. Just a real quick piece on consistency. If you guys haven't read, and there's a ton of books I recommend, but a good one is Atomic Habits. It talks about making habits, helps you get in the right mindset in the right place to focus on processes, because that's what it's all about, right? The process. It's all about following the process. So anyway, that's it. I don't want to get on a long tangent or anything with that. I'll come back if for the S&P, especially if we end up having a little rally today. Green stays above the red on the 30 minutes, so we continue with that long bias on both the 4 hour and 30 minute. They're confirmed. Then we'll be able to take that action and continue forward. And at that point, I'd have a trade, and I will be able to. Sorry, I've got all these messages popping in about something that expired. Then we'd be able to have a trade, and I'll talk about that later today. So if there's a trade this afternoon or later this morning, I'll be able to put that up, talk about what was traded, why it was traded, and so forth. If there aren't any trades, then we'll just come back in the morning and keep pushing on from there. All right, have a great day. We'll talk to you soon. Bye.